Policy committee will be announcing its first decision of the year, with economists anticipating it to be a tough call, as conditions seem favorable for a cut, but inflation remains above the new target of 3%. While some expect a cut, others say rates will likely remain unchanged at 6.75%, meaning the prime lending rate will stay at 10.25%.
South Africa is expected to see a close decision on interest rates this week, either a 25 basis point cut or the interest rates being left unchanged. Inflation is well removed from the current target at the moment of 3%, with the latest outcome at 3.5%, or actually just above that 3.6 for the month before at 3.5%, and in fact coalescing around that point for a few months now. Inflation is not back at target, and the Reserve Bank could choose caution and wait until inflation becomes entrenched at the 3% mark before cutting again. The South African economy has shown good growth last year as a consequence of the agricultural sector, but showing resilience overall. We continue to expect the Reserve Bank may on balance not cut interest rates, but as we indicate, it's a very close call.
A Nedbank senior economist shares the same view.
The environment is quite favorable right now for another interest rate cut, but I doubt if the Reserve Bank is going to move very fast. It's all about whether the rand is going to settle where it is right now, or we're going to see a bit of a reversal of some of these very strong gains. Remember that it's all at the moment about a weak US dollar, which is being talked down even by President Donald Trump. We're seeing it boosting gold, and the rand is just in this sweet spot. But how long will it last? And the Reserve Bank will be watching that quite closely. The Reserve Bank, as we do in the country, prefers a stable currency, so forecasting can be a little easier. So, I believe that the Reserve Bank will be a little cautious and maybe wait until it has settled a bit.
Independent economist Elise Kruger believes there is a chance of a cut given the rand's strength against the dollar and other favorable economic conditions.
I do think the extent of the rand strength that we've seen since the November MPC meeting will have an important impact on the decision. So at the time of the November meeting, the rand was still trading at about 17 Rand 25 to the dollar. And, we all know we're now below 16 Rand. So that's a notable appreciation since the previous meeting. That will filter into the Reserve Bank's own inflation forecast, for 2026 and beyond. And I do think that we will see a downward revision to the SABC's own CPI forecast as well. And, looking ahead, we are looking at petrol price declines that we've had now in January. We're expecting another fairly substantial one in Feb. So if you look at the forecast curve, in my view, as headline CPI will be very close to 3% as soon as February this year.
Annual consumer price inflation was 3.6% in December, up from 3.5% in November. At its last meeting, the MPC said it remained on track to deliver 3% inflation over the medium term, amongst others as a result of a stronger rand and lower oil price assumptions. Gloria Sefako Musi, SABC News, Johannesburg.